Then Just Style is under some pressure after reporting rather disappointing numbers. Reema is with us to take us through the highlights. Reema?
Yes, indeed, Nigel. Very disappointing set of earnings. Revenue growth has slowed down to single digits. Margins would be at a multi-quarter low. And the core search business is getting hit on account of increased competition, whether it's from the likes of Google or vertical-specific classified like Zomato, etc. So if you look at the numbers, the top-line growth is only at 6.2%. Compare this to the past. 3 years ago, the company's revenue growth was in excess of 25%. It slowed down to about 10 to 15% in the last 3 quarters, and this time it's further crunched down to single digits. That is having an impact on margins as well. So margins have contracted by 27% all the way down to 16 to 17%. The key reason for that is that in order for the company to improve the sales performance, they've made a lot of hires, sales employees to be specific. So 300 employees got added this quarter. They've guided to add another 2,000, a total of 2,000 to 2,500 employees in FY17 itself. So the more people you're hiring to revive your sales is going to impact their margins. And the management, if you hear them, have already indicated that margins will be compressed in FY17, A, on account of the investments, i.e. sales force, and secondly, on account of the fact that they will be doing an ad campaign which starts in September. Profits, however, have gone up by nearly 8% despite a decline in margins because it's supported by a higher other income as well as lower taxes. If you look at the stock performance today, it slipped close to about 3.5%, but bear in mind, the stock is actually halved in 2016 despite the support coming in from a buyback. The only point that we'd like to make is that, the company has significant cash on its books, which at some point of time provides that support. The cash is about 850 crore rupees. That's 124 rupees per share. That's nearly 25% of the company's market capitalization is purely with cash in the books. And this is a cash-rich, this is a cash-generating business. It's services business. So cash in the books, never gets depleted. It's been around this 800, 900 crore for the last many quarters. So this cash support will continue to stay for Just Style.
That's right, Reema. Thanks so much for that. By the way, the stock in the last 3 months, in fact, has corrected close to around 44% approximately. It had a one-way run to around the 800 rupee mark, and then, in fact, it did see some selling pressure. Yeah, you pull up